This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the Bitcoin Bulletin Podcast. We have a lot to talk about today, a lot of which, of course, is related to the price action and speculation about the price action and the economy, etc. But before we get into that, real quick, a look at the vital statistics. Today is Wednesday, October 19th, 2022, and that means it is DCA Wednesday. As of the time of this recording, we find ourselves at a Bitcoin block height of 759,438, and Bitcoin is hovering around the $19,000 range, currently at $19,144 US per Bitcoin, or 5,224 sats per cuckbuck. 5,224 sats per US dollar, pardon me. If you value your wealth in gold, it will currently cost you 11.8 ounces of the shiny yellow rocks to purchase just one Bitcoin. Up a tiny bit from last week, but pretty much exactly where it's been for the last month or more, actually. If you value your wealth in oil, it will currently cost you 482,749 sats per barrel, with one Bitcoin buying you 207.16 barrels of oil. That's pretty much exactly where we were last week as well. Both Bitcoin has remained relatively about the same in dollar terms and in oil terms. Along those lines, one Bitcoin will purchase you 1,147 Papa John's pizzas, and that's also about where we were last week when one Bitcoin would score you 1,149 Papa John's pizzas. So that's still a heck of a lot of pizza for just one Bitcoin. That works out to somewhere in the neighborhood of 3.5 years, more than 3.5 years worth of pizza if you bought one large pepperoni pizza from Papa John's every day. So that's a lot of pizza for just one Bitcoin. And for those of you following Bitcoin's market capitalization, the market cap is almost exactly where it was last week as well. Surprise, surprise. With Bitcoin currently ringing in at a market capitalization of $367.3 billion. Last week was $367.7 billion. I know 4.4 billion is a lot of money to a normal person like you or I, but when it comes to market cap, that's very little change, especially when you compare Bitcoin to its $1 trillion market cap that it maintained during the bull run. I think that's about the $50,000 range for Bitcoin, plus or minus. So significantly less than the market capitalization we were seeing a year ago when Bitcoin was at its new all-time high. All right. The mempool is also exactly where we were last week. Last Wednesday, there were 3 blocks worth of transactions pending in my mempool on my Umbrel node, and there are currently 3 blocks worth of transactions pending on my Umbrel node. And that's exactly the same as it was the week before that, when there were 3 blocks worth of transactions pending in the mempool on my Umbrel node. So we're seeing a lot of rhyme. And maybe that's an indication of stability. Maybe that means the people that are calling for a bottom, for Bitcoin to a bottom, maybe they're right. We'll get into that a little bit later. But along those lines, 1 sat per byte transactions will still clear within a day, sometimes faster than other points in time. For example, during the evening, there tends to be less traffic on the Bitcoin network. So if you want to squeak those 1 sat per byte transactions in, of course, use replace by fee so your transaction doesn't get stuck. But if you're willing to wait a while, though, we'll clear within a day. Maybe put those transactions through while the United States and Europe are sleeping, because that tends to take a lot of pressure off the Bitcoin network. If you want to guarantee that your transaction is included in the next Bitcoin block, it's currently recommending that you spend a fee of 14 sats per byte. That is double last week. And I'm not 100% certain why, since the traffic seems to be about the same. I've never paid more than 1 sat per byte, at least not when I've had the choice. Some apps, some exchanges calculate the fee for you, some pay the fee for you. But whenever you make a transaction where you input your fee, I've never paid more than 1 sat per byte. And sometimes I've waited, but I've never really waited more than an hour or two. So maybe I've gotten lucky, or maybe I just time all my transactions for when the traffic's lower, which tends to be nights and weekends. Right now, I don't think you need to wait for the weekend to get your transactions out there included for 1 sat per byte. Anytime in the evening should be fine. But who knows? Again, I recommend using replace by fee, because if something happens where transactions just explode, you could get stuck waiting for a while. And along those lines, my favorite metric to follow is Bitcoin's 24-hour transaction rate. And that too is looking eerily similar to last week at 3.09 transactions per second, down from the 3.13 transactions per second we saw last week and the 3.13 transactions we saw the week before that, but still above that 3 transaction per second that I like to see it maintain, not above the 3.14 transactions per second that have seemed to correspond to an increase in the price. And as you would expect, at 3.9 transactions per second, the price has been relatively sideways. I mean, it's been down for the day if you look at the daily or the hourly chart, but that's after Bitcoin pumped a little bit. So once again, Bitcoin tends to be, when you zoom out, which is what dollar cost averaging helps you do. When you zoom out, Bitcoin has been trending flat, going sideways, which is not uncommon for the quote unquote crypto winter, unquote, the Bitcoin bear markets that we've been through a couple of now. All right. And speaking of the Bitcoin network, we are getting closer to the next Bitcoin mining difficulty adjustment. We had the huge difficulty mining difficulty adjustment, 2 weeks ago now. It got 13.6% more difficult to mine a block. And then last episode, it was looking like we were going to see another significant increase. But it's really hard to tell when, you're still 2 weeks out from the next mining adjustment, because it's an average, like everything, like Bitcoin's difficulty, like Bitcoin is programmed to where a new block should be found every 10 minutes, but that's an average of 10 minutes, and they average that over 2016 blocks, because, we saw a block that took, darn near an hour in the last week, and then we've seen blocks come in back to back, sometimes in the same minute. So it's kind of like flipping a coin. If you flip a coin, you should get 1 heads and 1 tail, 1 heads and 1 tail on average, but it's not unusual for you to flip a coin and get 5 heads in a row. But if you flip that coin 2016 times, half of those should be heads and half of those should be tails. And that's why Satoshi programmed the difficulty to adjust every 2016 blocks, because had he programmed it to adjust, say, every week, we had been looking at an 8% difficulty increase 2 weeks ago, a 4% difficulty increase just last week. Correction, a 12.7% difficulty adjustment 2 weeks ago, an 8% difficulty adjustment last week, and now it's looking like it's going to be about a 3.82 to 4% difficulty adjustment. And that is just over 3 days away, so those numbers are kind of getting close to where you could consider them locked in. It's looking like it's going to be about a 4% difficulty increase. And I think that'll be another all-time high in network hash rate, because I don't know, there's been a lot of speculation. I even heard someone on one podcast say they think Bitmain has their latest generation of ASICs perfected, and they've got them all running and they're testing them. Bitmain's been accused on numerous occasions of, when you order whatever the latest generation miner is, like when the S19 first came out or the S9 first came out, that they would take those miners and run them for like 90 days before they shipped them to you to quote unquote test them. And of course, they mined a boatload of Bitcoin during that time. And so there's some speculation that that's what's going on right now, that maybe Bitmain or some other manufacturer has some new ASICs out there that they are testing, and that has been responsible for the increase in hash rate. But in general, over Bitcoin's lifespan, hash rate has always trended up and to the right, just like the price of Bitcoin. And as we said on the last episode, that has often been an indicator, a leading indicator of the next bull run. Mining power often comes online when in advance of the next bull run, even though it's less profitable to mine right now. Just like there's a lot of noise and distraction and a lot of hype and a lot of fun during the bull run, but most of the technical work and the coding and the new projects get released during the bear markets. The same thing tends to happen, at least it appears to happen when it comes to the mining industry. So who knows? And again, we don't have a crystal ball. We're not a time traveler. We can't see the future. But hash rate is going up, and that's the one thing we can say for certain. And that is reflected in the current block time average. And currently blocks are coming in on an average of 9 minutes and 37 seconds. That is slower than last week's 9 minutes and 14 seconds, which is reflected in the fact that the expected difficulty increase is about half of what it was supposed to be last week, but still a lot faster than the 10 minutes per second that Bitcoin is aiming for. So that's good to see. Every time that we're in a bear market and every halving, you hear people talk about the quote-unquote miner death spiral when with respect to the halving, the reward that miners get gets cut in half every 4 years. And the doomsayer is like, oh, that means people are going to turn their miners off. And that means it's going to get harder to mine Bitcoin. So more people are going to turn their miners off and more people are going to turn their miners off. And that's going to result in a spiral that kills Bitcoin's hash rate. Of course, that has never happened. And the same thing is said every every bear market. When Bitcoin gets to a certain price, all the miners are going to turn their miners off. And then eventually it'll get to the point where it's impossible to mine a block. And it'll take so much time that it doesn't reach the next difficulty adjustment. And so more miners will turn off, etc. Obviously, that's not happening because we're looking at new all-time highs in hash rate, which is awesome. All right. Some of the news that's out there before we get into the reason why we're here. Of course, the reason why we're here being to dollar cost average, add to our DCA stack, to add another $20 worth of Satoshis to our already growing stack. But some of the things that are making it that are making the news today is, of course, as I mentioned, the price action. CNBC ran a headline saying October is a historically strong month for Bitcoin, but price action this month has been oddly lackluster. Known in crypto trading circles as Uptober, Bitcoin has historically churned out some of its biggest gains. I misquoted them. I think this October has historically churned out some of the biggest gains for Bitcoin. Crypto has been in a lull this month, however. Of course, the same thing has been said about the stock market. According to an article in MarketWatch, quote, while September lived up to its reputation as a brutal month for stocks, October tends to be a bear market killer, associated with historically strong returns, especially in midterm election years, analysts said. So, while CNBC is trying to make it look like the sideways or whatever price action in Bitcoin is an indication that Bitcoin is dying, they're not saying the same thing about the stock market. They're just, they're saying the stock market's down, even though it should be up. So CNBC doesn't make that reference in their article. Although the MarketWatch article does hedge by saying up October, however, is also associated with historic market plunges. And skeptics are warning investors that negative economic fundamentals could overwhelm seasonal trends and what's traditionally the roughest period for equities comes to an end. So, you got to hand it to MarketWatch. They're not calling an end to the bear market in stocks. They're calling it both ways. They've literally written an article where they can call themselves correct 6 months from now, regardless of what happens. But the point being, the doom saying that we missed out on Uptober in Bitcoin, therefore it must be the end. Bitcoin's finally dead. Those same articles could be written about the stock market. CNN is in full bear mode, however, with their headline, Welcome to September, the historically worst month for stocks last month, saying the market was up only slightly, but the S&P has fallen, blah, blah, blah. I think, this isn't a stock show. We need to get more to the point. And the point is, have we bottomed? I've heard numerous people stand by their June bottom calls on various podcasts in the last week. I think it was Jeff Booth said on Cafe Bitcoin a long time ago, even last spring, that he was going to call June as the bottom. in this market for Bitcoin. He said the stock market was going to take longer, but that Bitcoin was going to rebound before the stock market, as it traditionally has done during previous down cycles, where both the markets and Bitcoin were down, such as after the 2020 lockdown crash. Of course, one of the people that's been most adamant in their defense of a bottom call on numerous occasions has been Plan B. And Plan B is no less adamant about June having been the bottom in his recent tweets, tweeting on the 16th, just a couple of days ago, that 20K is the new 4K, with a chart showing realized price and some other data, which would tend to indicate that that maybe we are in a bottom. And then, of course, he tweeted just 2 days ago a poll, and this I guess you can't call as his opinion because it's other people's opinions, but his poll saying 17,600, parentheses, June 18th, 2022, was the bottom, yes or no? And the poll is closed now, but it had 28,655 votes, and the answer was no at 51.6% and yes at 48.4%. So probably what they would call in terms of election results a statistical tie. And that's an interesting metric because, if it had been overwhelming with people saying, yes, June was the bottom, that's always, when people are exuberant, when people say the bottom is definitely in, it's always when you get that other crash. And when people are saying, no, the sky is still falling, the bottom is, we've got a lot to fall still, the bottom is nowhere near in, we're going to plunge to 10,000 or 1,000 or whatever the doomsayers might say. When that's consensus, of course, that doesn't happen either usually. So anything goes. It's 50-50 out there. And speaking of Plan B tweets, he had an interesting tweet about the resilience of the internet. People talk about, well, that money's not going to do you any good during the zombie apocalypse because when the internet goes down, you won't be able to spend your Bitcoin. And people say, well, if the internet goes down, you're not going to be able to spend anything unless you're, lugging around and trading seashells and beads and you're going to be bartering. But he points out that, quote, the internet was built as a means of communication that could survive a nuclear war. A nuclear explosion could impact only a city, country, continent, not necessarily the entire planet. And that there are satellites running Bitcoin nodes and Bitcoin works with parentheses ham radio. And he's right. The whole purpose of the internet was to invent a decentralized communication network for the military. DARPANET or ARPANET was designed to be resilient to such things. So that's actually a pretty interesting point. And it's also interesting to note the parallel between the decentralization of the internet being its strength and the decentralization of Bitcoin being its strength as well. So interesting quote from Plan B, not one of his stock to flow quotes or bottom calls, but interesting nonetheless. But back to the bottom thesis. Looking at the trends from the last two halvings, if we follow the trend from the first halving, we may very well have bottomed. But we should expect to go sideways for another 6 months or more before slowly climbing to the next post-halving bull run. As you know, all of the previous bull markets, post-halving bull markets, we've set a new all-time high somewhere between 6 and 18 months after the halving. We saw this after the last halving where what the halving was in like May, right, of 2020. And we didn't set a new all-time high until November of 2021. So we set the first new all-time high. Well, we set the first new all-time high in April when Tesla came out and made their announcement about Bitcoin, when Elon, the Elon pump. And maybe that's coincidence, maybe not. But we had the double dip. We had the double top. So we didn't set our all-time high, our true all-time high, until November-ish, October and November. After, we had a big dip over the summer. However, if we follow the last halving, there's going to be one more final capitulation dump, as much as another 50%. So if you look at the previous halving, Bitcoin dropped to that $10,000, it bounced between 8 and 10. It was 6, as low as 6 for a while. Then it kind of bounced around 10, if I recall. But then we had the hash war dump, and Bitcoin dumped all the way to 3,400 or 3,500 before recovering and steadily climbing up towards the next halving, and then going on that double top face melting bull run that we had. So along those lines, if we did lose a total of 80% from the top, like Bitcoin is known to do, the bottom would be around 13,800, which would be consistent with following the trend from the last bear market. But remember, nobody has a crystal ball, and there is a lot of debate about the bottom last time. And at least half of the experts turned out to be wrong. If you remember when we did dump all the way down to 3,500, there's even that famous meme where, the Bitcoin, please go to the moon. Ooh, I've quoted that meme probably the last 3 podcasts in a row. But the point being, Tone Vase and many other doomsayers were calling for Bitcoin to drop, another 60% or more from that low. Tone Vase was saying Bitcoin was going to bottom at 1,000. Of course, there were the naysayers saying it was going to 0. And then other people, including Bozo Mike Novogratz, were saying that we'd already bottomed out. And for whatever reason, he was right. He was one of the many people who were right. And we only know that in hindsight, because hindsight is 2020, and Bitcoin is going to do what Bitcoin's going to do. But remember, while history doesn't repeat, it does rhyme. So while it won't necessarily match either of the 2 previous halving cycles, it should be similar in I guess we'll find out, because that 2024 halving is coming up fast, currently expected to be in April of 2024. That is, that's less than 2 years away. That's a year and 6 months, a year and a half away. So that's not much further away than the last all-time high was, and it's about the same distance away as that $64,000 Elon pump was. So if we think that April 2021 high was just yesterday, if it seems like only yesterday that Bitcoin was on that phase-melting tear, well, that's how it's going to feel when the next halving rolls around, because it's about as far away. All right, so a little bit of doom news out there. A lot of Bitcoiners have been dooming about climate and ESG and that virus thing that's going out there. But one of the things that's been making the rounds is the headline, and this headline's straight from the UN. They're flat out freaking bragging about this. Google teams up with UN for verified climate information. That is the headline on the United Nations headline. They openly brag, quote, millions of people around the world go to Google to get information about climate change and sustainability. Now, when users search for, quote, climate change, they will find authoritative information from the United Nations in 12 languages. They brazenly continue. We are happy to team with Google to ensure that factual, trustworthy content about climate is available to you as a wide global audience as wide a global audience as possible, said Melissa Fleming, United Nations Under Secretary General for Global Communications and Propaganda. I added the last part. Misinformation is so widespread these days, for example, by the United Nations. Misinformation is so widespread these days that it threatens progress and understanding on many critical issues, including climate. The need for accurate, science-based information on a subject like climate change has therefore never been greater. These fucking fascists, pardon my French, when the government is the one providing you their source of truth, that should set off massive alarm bells regardless of what it was. Remember the Jacinda, the Prime Minister of New Zealand, when she said that she was going to be your one source for truth on the virus, that if you heard anything else, if it contradicted what she said, it was wrong. They own the science. And now the UN is bragging that they own the science on climate change, and they're going to make sure that you only get their science. And they've got Google to enforce that. So, hey, this shouldn't matter because you shouldn't be using Google. Use DuckDuckGo, right? And that's all the doom and gloom I'm going to get into. This is an optimistic podcast. I am excited that Bitcoin is inexpensive and we are stacking cheap sats. And if Bitcoin dumps, if we do get another 2019 style or 2018 style crypto winter where we get one more 50% capitulation, I'm going to stack even more sats. And keep in mind, if that does happen, that was incredibly short-lived. What was long and cold about the crypto winter was that sideways action that we're seeing now. That big final capitulation to 3,500 was relatively short-lived. So if you do see that, BTFD, man, buy the freaking dip. Okay, you've probably heard the news already because Bitcoin Magazine broke this several days ago, but MasterCard has announced that, quote, MasterCard to help banks offer Bitcoin and cryptocurrency trading. According to Bitcoin Magazine, MasterCard has announced plans to help banks offer Bitcoin and cryptocurrency trading, handling any regulatory compliance and security. Quote, MasterCard will work with Paxos to bridge the gap between banks and will manage the security and regulatory compliance, two big reasons many banks have stated for avoiding Bitcoin and cryptocurrency. End quote. Is this a good thing? Yes. No. Guess it really depends on your point of view. If you want to see number go up, it's probably a good thing. If you want to see Bitcoin in as many hands as possible, maybe it's a good thing. But if it's captured Bitcoin, if it's paper Bitcoin, if it's held on exchange Bitcoin, maybe not such a good thing. So I guess it's one of those things. We'll wait and see. But also this highlights the fact that Bitcoin is for friends and Bitcoin is for enemies. One day, the banks will own Bitcoin and the banks will be fully, they'll have their tentacles fully entwined in Bitcoin, just like they do any other currency, any other asset. When they finally wake up and realize that it's going to be the new global reserve currency, they're not just going to roll over and die. Obviously, they're going to want to get a piece of the pie. They're going to want to get out on the action. And this may be another step towards that. So good, bad, or indifferent, it doesn't really matter. What does matter is the 21 million number. And so as long as you hold your Bitcoin and you get it off exchanges, that should be all that matters to you. Is that you increase your stack, you hodl as much Bitcoin as you can get while you have the chance. Right now, you're still front-running the banks. You're still front-running JP Morgan. You're still front-running Visa. You're still front-running the Bank of England. You're still front-running the Federal Reserve. You're front-running every country except for El Salvador. If you want to see the pleb stack as much Bitcoin as possible, then get to it, because all the signs are out there that, the big money, the institutional money is waking up, and they might not be, they might want to kill Bitcoin, but they're slowly realizing they can't. And once they finally admit that, before they finally admit that, you're probably going to find that they've been stacking, that they've been hoarding. But once they do admit that, you'll want to have your piece of the pie. You're going to want to have your stack already. We're going to want as many normal average people to have as much Bitcoin as possible, because that's less Bitcoin that the banks and institutions can manipulate. All right. Cedric Youngelman had an interesting tweet, or not an interesting tweet, a prophetic tweet along those lines on Twitter today, posting, quote, if you could buy 100 years of your salary for around $19,000 to $20,000, would you? And what he means there is, right now, one Bitcoin is $19,000 to $20,000. But in a few years, when Bitcoin's at $1 million or $2 million or $10 million or whatever you think Bitcoin's going to go to, that could be the 100 years worth of salary. I mean, for example, if Bitcoin hits $1 million, and that's the moon to a lot of people, but, a lot of people are calling for substantially more. And was it Greg Foss that did the math that it should be around 2 million, or it was Lawrence Lepard, I think, did a $2.5 million breakdown of why Bitcoin would be $2.5 million in the next 5 to 6 years. He was on a couple different podcasts. I think that was his number. Anyway, if Bitcoin hits just $1 million, every $20 of U.S. fiat you convert into Bitcoin right now would be more than $1,000. And the math is really simple on that, and that's rounding up. So at $20,000, if Bitcoin goes to that $20, if Bitcoin goes to 100,000, that's 5x, right? So that 20,000 would be 100, and then $1 million from 100,000 is another 10x. So that's $1,000. And the cheaper you get Bitcoin, the more it's going to be worth when Bitcoin does hit that $1 million point. And if Bitcoin does hit Larry Lepard's $2.5 million or whatever point, then it's going to be 2,500 or more, depending on how cheaply you stack. And speaking of Twitter, one of my favorite Twitter celebs, one of my favorite Bitcoin OGs, the Techmeister, the original unique beast, the original strong hand, the OG that was telling you to buy Bitcoin in 2013, appears to be enjoying his travels around the country in his quote-unquote black Nissan Versa. He's been increasingly quiet on Twitter, not tweeting a whole lot in the way of original Bitcoin content. He's retweeted a couple of posts, even today. He's posted his Shabbat Shalom posts every week. But he did give us a couple of hints about what he's been up to personally in the last few days with 2 tweets about Salt Lake City, Utah, quoting on the 13th about walking around Salt Lake City, saying, quote, Salt Lake City around 7 p.m. I'm in the middle of my post-meal walk, and I noticed 6 cars in the McDonald's drive-thru and 5 cars at the Walgreens pharmacy drive-thru next door. One helps lead to the other. Be in motion. Be a unique beast. So he's still out there. He is still in motion. He is still a unique beast, and that's an interesting point about the lifestyle of the fiat lifestyle of the average American, eating at McDonald's and then taking your pills, but only tangentially a Bitcoin post. And of course, I think the most recent thing I've seen him post about anything was just 3 days ago, and it's also about like Salt Lake City, saying, my travels have taught me that Salt Lake City is the best city with a major league sports team, aka big city in North America, at least during non-snow time periods. I think about this every day I'm here. If it did not snow, I would stay longer. So, hey, Adam, I'm glad you're out there enjoying what you've built for yourself. That's really cool. I know you don't owe us anything, and I know you get really irritated when people say they miss you because you haven't gone anywhere. But it would be fun to hear your take on where we are in this bear market. Again, I know your 210,000 block theory, and we all have strong hands like you tell us to have. So we're not going anywhere. But hey, man, it would be fun to hear. It would be fun to hear an update. Personally, I'd like to hear an update about your adventures around the country and your black Nissan Versa, because I've been following all the different places you've been, and it would be cool to hear your take. So that's enough non-Bitcoin, or as Adam would say, beyond Bitcoin content. Back to Twitter celebrities, and back more specifically to Bitcoin. We're all still waiting with bated breath for the HODL not versus fake Toshi verdict. Remember, the judge said that this verdict will be released on or before November 8th. Of course, if governments in Oslo function like they do in the rest of the world, that means November 8th at the earliest. But November 8th is just 1 day shy of 3 weeks from today. So if they do release the verdict on the 8th of November, that will be right after we get 2 more DCA Wednesday episodes in. We'll have just barely missed that verdict. And again, it actually literally means nothing other than hopefully it'll be a symbolic victory for HODL not. As you remember, the fake Toshi is suing HODL not in multiple jurisdictions for calling him a fraud. Despite the fact that the overwhelming opinion out there is that he is. In fact, he was called so basically by the judge in Florida during the Kleiman case, where he was openly chastised for forging evidence, something he was called out again on the trial in Oslo, Norway, for doing again. If CSW wins this case, all it means is that the judge says HODL not was mean to him. It doesn't mean that he is Satoshi. And if he loses this case, it doesn't mean that CSW is going to go away either, but we would like to see a little judicial bitch slapping, pardon my French, in fake Toshi's face, and hopefully we'll find that out sooner rather than later. Hopefully it doesn't happen 1 day after my DCA Wednesday episode, because I'll either have to do a special episode to talk about it, or it'll be old news by the time we finally get around to it. And speaking of finally getting around to it, the reason we are here today is because it is Wednesday, and as you know, Wednesday is DCA Wednesday. And if you are new or just following us for the first time, if you don't know what DCA stands for, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. We also believe in the KISS principle, to keep it simple, stupid. And so what we're doing is we're stacking once a week, and that's our regular interval, and we're stacking just $20, and that's our equal portion. And the reason we're only stacking $20 is because every day on social media, you get at least one post saying 2 things. Am I too late? But also, I only have X number of dollars. Is it even worth investing in Bitcoin, in buying, converting my fiat to Bitcoin at such a small amount? And I wanted to show that, yes, it is worth it. No, you're not too late. And yes, it is worth it. And so I chose about the smallest amount I could justify that would make and still make hopefully a material difference. And of course, DCA and Bitcoin are long-term investment strategies. You should not be investing any money that you need immediately that you might need to survive. You shouldn't be like Bitcoin Tina, where you go in 100% into Bitcoin with the money that you're going to need, because during a downturn, when you need to pay your rent, if all your money is Bitcoin, that means you're going to be paying your rent with Bitcoin that's on sale, and that would really suck. So, but I think regardless of where you are, you should be able to come up with $20. But again, you do you. If $20 is nothing to you and you're comfortable investing a lot more, then make that call and invest a lot more, whatever you feel comfortable investing. Again, do your own research. Don't get your advice from strangers on the internet, especially me. Again, this is not financial advice. This is just me demonstrating or experimenting, not even demonstrating, experimenting with dollar cost averaging, and doing so in a manner that I think anyone should be able to benefit from, regardless of where you are in the world, because anybody should be able to come up with $20 a week, unless, there are places in the world where survival is a daily struggle. So I don't want to say anybody, but almost anyone listening should be able to come up with $20. And if you can't, then figure out what you can come up with, because Cash App will let you stack as little as $1. I know there are other services out there where you can stack as little as $1. So do your own research. You do you. You pick your equal portion. You pick your regular interval and get to it. Along those lines, this is going to be our 65th stack. We've stacked 64 times. We've stacked a total of $1,280, including $28.80 in fees. That has earned us a stack of 3,765,328 sats. We've only been doing this for a little over a year, guys, and I think even investing just $20 a week in just a year, we've built a stack that will be a substantial stack one day when Bitcoin moons. I don't think, if Bitcoin's sitting at that $2.5 million mark Larry Lepard was talking about, 3.7 million sats is going to be worth a lot more than $1,200. It might not be life-changing money right now, but it will be one day, I think. I do believe, and that's what we're hopefully trying to illustrate. All right. We've stacked those sats at an average cost basis of $33,994.98 or 38 cents, which does put us underwater. Again, we started stacking. Well, we started stacking after the first new all-time high, after that April high. We started stacking in July of 2021. So we've bought very expensive, and we are now buying we bought the dip, but we bought all the way down as well. Not the dip, but we bought the bull market, and we've bought the bear market. And so the cheaper we buy, the more sats we buy at these cheaper prices, the lower that average cost basis is going to be. But again, you shouldn't be looking at the average cost basis. You shouldn't be looking at the amount of money you've stacked. What you should be looking at is the amount of sats you have. And the important thing is that every day you have more sats, or every week you have more sats, or every 2 weeks, whatever interval you choose. Your goal should be to have more sats. Your goal should be that when we get that next face melting bull run, when Bitcoin sets its next new all-time high, when it goes blasting past 69,000, that you aren't filled with regret that, oh man, I had $20,000 and that I could have invested in Bitcoin and I chickened out, and now you're going to FOMO in at 150,000, and get less than a fifth of the Bitcoin that you would have gotten by stacking now. All right. So as usual, we're going to stack using the Cash App. So you pick an app that you are comfortable with. Cash App is not available to everybody, but if it is available to you and you do want to use Cash App, there is a referral code in the show notes. They are not a sponsor of the show. Anybody that has Cash App has a referral code. If you use ours, though, you'll get $5 free for signing up and using Cash App, and we'll get $5 free too. So that'll help support the podcast, and you'll get paid to do it. So please consider using that link if you do decide to use Cash App and you don't already have it. But again, pick an exchange or an app that you feel comfortable with. The only thing that's critically important, other than not getting ripped off in fees or rug pulled, is that you stack those sats and you get them off of that exchange. Perhaps the thing I like the best about Cash App is they will let you transfer your sats to your hardware wallet for free. So while they aren't the 100% cheapest, as far as fees for stacking sats go, it's about 2.25% to stack with Cash App. They will let you withdraw those sats for free, and that'll make up for some of that fee. So again, do your own research, pick an app or an exchange you feel comfortable with. We're going to use Cash App. So I'm opening up my handy dandy Cash App. and they moved Bitcoin. It's no longer its own button on the bottom, unfortunately, but click on buy Bitcoin, click on $20, click confirm, and boom, just like that, we've purchased another 102,252 sats. Bitcoin has gone down a tiny bit while I've been yapping. We bought at $19,119.35. But most importantly, that has increased our stack to 3,867,580 sats. And it's lowered our average cost basis by another $381.63. So that cost basis that was $33,994 is now $33,612. And if Bitcoin's still down next week, it's going to go down some more. And that is really cool. But remember, when Bitcoin does boom, if Bitcoin hits that $1 million mark, that 3,800,000 sats is going to be worth $38,675.80, which nobody could argue would not be one heck of a return for a mere $1,300 US dollars. And for those of you who are worried that $20 isn't worth investing, $100 isn't worth investing, I think it would be really hard to argue that $38,000 would not be a significant amount of money for anyone. I mean, even if you're living in the United States and you're upper middle class or wealthy, $38,000. I mean, maybe you're a rich Hollywood celebrity and you blow that on dinner. Hey, that's a dinner you didn't have. But if you're me, or if you're living in Argentina, or if you're living in Venezuela, or if you're living, in Kenya, or if you're any country that's not considered first world, you're going to be really happy to have $38,000. And if Bitcoin goes beyond $1 million, that number goes up too, because one Bitcoin always equals one Bitcoin. But if that one Bitcoin's worth that 2.5 million sats that Larry Lepard was talking about this week, then instead of 38 million, you'd have more than 38,000. You'd have more than $80,000. And then up and to the right, infinity, 21 million divided by infinity. Depending on depending on what you believe, if you believe that Bitcoin's going to keep going up and to the right, or as Michael Saylor says, it's going to keep going up forever, Laura, forever, the sky's the limit. And all that really matters is that you keep stacking those sats, which we have done, and which we will do again next Wednesday, because that is the interval that we've chosen. Real quick, before we go, I just wanted to say, please consider following us on Twitter. On Twitter, we are at BTC Bulletin Pod. That's at BTC Bulletin Pod. And I really, really am interested in hearing what you have to say about the podcast. So please consider giving us a DM or commenting on one of our posts. Let us know what you like or maybe what you don't like. Or if you prefer to email us, you can contact me by email at bitcoinbulletin@protonmail.com. That is bitcoinbulletin@protonmail.com. But don't forget to join us next Wednesday and every Wednesday as we add to that stack for our DCA Wednesday episodes. But until then, keep on stacking those sats, you sexy sat stackers.